Right, yeah, we're seeing dramatic moves right there in the global oil market. Let's talk to Dumebi Oluwole. She's a senior analyst at financial derivatives company and also an economist. Dumebi, it's been quite the night.
Yeah.
So far in the oil market. Starting the week, you'd expect oil will remain at the 70 range and maybe even higher, by the end of the week. But that's not what's happening right now.
Yeah, I mean, it's been a very interesting 24 hours. I mean, even when preparing for today, as of yesterday, we still saw oil prices around 65 or even about 70, close to $70 per barrel. And as of this morning, was far down to about $64 per barrel. It lost about 5% between yesterday and today. So there's a lot of economic events driving the oil market right now. I think from everything we've discussed over the past couple of years, we know that oil markets are one of the first markets to move when anything happens globally, and we're seeing the markets generally move in that regard. So first of all, as of yesterday, we're still looking at we're still considering the uncertainty around the US's attack on Iran. As of this morning, we did know about the ceasefire agreement, and that was what actually brought oil prices down.
And we got breaking news from Israel.
Exactly, and as of a few minutes ago, we're also seeing that Israel is saying, you know what, if Iran is not going to, honor the ceasefire agreement, that they're going to, move forcefully, So basically, all of these events just go to show that the markets right now are very, very volatile. But it also tells us that if oil prices, if the events around the U.S., Iran, and the Israel, entire situation, if it eases, right, which right now still looks very uncertain, but what it means that the markets will react positively to that news, because I mean, nobody wants an escalation of what's currently happening, especially when you consider how significant, Iran is to the oil market in terms of oil supply. So there are two ways to basically look at this, really, when it comes to Nigeria now, bringing it home.
Right.
There are two ways to look at it. The first aspect of it is the external impact, and the second is the internal impact. The external impact, basically, right now with volatility we're seeing in the oil market, if oil prices rise consistently, what that means for the Naira, it definitely means the Naira will be more stable, because, there'll be more oil receipts coming in. Oil still accounts for about 70% of our total export earnings. So that's pretty much good news for the Naira.
But it seems that was short-lived.
Of course. But right now it seems very short-lived. The reason why that is still a conversation we can still have right now is because the market is still quite uncertain. Because if Israel retaliates, what it means that Iran is also going to retaliate. What it means is that the market will price an escalation or a continuation of what we saw a few days ago. And what that means that oil prices could come back up. Right, so that's why that conversation that's why that impact, or understanding the external impact of that, is still extremely important. But if you look at it from the angle of oil prices easing, right, which most likely might be the likely scenario, oil prices easing to around $60 to $65 per barrel and retaining the trend within that price range. What it means is that our fiscal deficit could increase, because oil prices right now are lower than what we budgeted in the 2020.
Even though it was getting closer.
Getting closer to it. But
so do you think the markets reacted too sensitively to the ceasefire news?
I mean, not too sensitive. They reacted the way we all react we all would react at home. It was very much expected in terms of the market reaction. And the reason is because no one wants an escalation. Right, no one wants an escalation, especially because we've seen how detrimental the Russia-Ukraine war has been. And remember, that is still ongoing. Right. The Israel-Gaza war is still at play.
Right.
So adding this is just too much uncertainty into the market. Global growth right now is forecast to reduce. The IMF and World Bank have, revised downwards their global growth forecast based off of all of these uncertainties. And what that tells us is the outlook for 2025, where we hope will be better than 2024, is a lot more uncertain right now going into the second half of the year. And that's why the markets are reacting the way they are. Current global, more advanced economies have seen their currencies, move with volatility as well, based off of this news. The US dollar is losing steam. We're seeing a lot of movement towards safe haven assets, basically telling us that the markets are trying to hedge against a lot of these risks that we are seeing. And what this also means for emerging and frontier markets, with Nigeria included, is central banks are going to react to this news, right? On the emerging market side, we will see an increase in gold reserve accumulation, because that's the trend that we have been seeing going into the first half of the year, and we expect that trend to continue. Why? Because they're going to start trying to hedge against the uncertainty that they're experiencing. Most central banks have their currency, have their external reserves with the US dollar. So what that means is that if the US dollar loses steam, external debt concerns, debt crisis concerns, repayment concerns will continue to linger. And so we're seeing a fast accumulation of reserves, which we still expect to continue. But on the flip side of it is the monetary policy actions, right? If all of this uncertainty continues, the chances of the US Fed cutting rates towards the end of the year, which they had said,
with the
it
plans
slims
of
down.
2 cuts.
Exactly.
For this year.
So the probability of that happening continually shrinks, right? Continually trims down. And what that means
does it make sense, from what we've been getting from Powell, Fed chair, because we know President Donald Trump has been, pressuring him to cut rates, cut rate now, and President Trump also said he advised the world, don't play into, higher oil prices. Because we know he wants oil prices
to come
lower
down,
to help the inflation story. But it seems Powell was right not to cut rates yet.
I mean, we can't blame him for keeping rates high simply because of, again, the uncertainty. It's very difficult to quantify the impact of uncertainty. Uncertainty is as vague as it gets, right? When you're trying to quantify the impact of that, the only thing we can do is we have proxies, right, to estimate how much of an impact it would have. And the first proxy most central banks will look at is inflation. And what is going to drive the inflation, or at least on a global level, is the movement in oil prices and commodity and other commodities, right? Especially food items, which we have seen trending upwards, right? So the chances that commodity prices are going to go far lower right now continually slims down the higher uncertainty goes. There is that inverse relationship. The more uncertainty we experience, the less likely that inflation is going to come down because of the commodity-driven aspect of it, right? And so Powell is obviously putting all of those aspects in place. And when you also consider the fact that
Powell sees what Trump doesn't see at this point.
I wouldn't say that, laddie. I wouldn't say that, laddie. But again, there's always that, we've always seen that on a global level and even on a regional level, on a domestic level. A lot of times there is that dissonance sometimes between monetary policy, actions and fiscal policy.
Yeah, the relationships are not that charming.
They are not exactly always going to play from the same book. But the end goal is almost always the same, right? But remember that what is the goal of the Fed chair? What is the goal of the US Fed? Just the same as any other central bank, to keep prices stable, right? And when interest rates are high, when you look at it and when you look at the monetary policy transmission mechanism, the goal is if interest rates stay high long enough, people are going to want to save, investments are going to keep coming in because people believe that, they're going to get higher yields. And if that's the case, it reduces, the supply of cash in circulation, it reduces, increases the value of the US dollar. So the only concern is how much of growth it could constrain if people try to access credit and access credit to expand their operations, and how negative that would now impact GDP growth in the US. But then again, when you consider the fact that the US is just not like frontier markets, right? The stark impact, or the more detrimental we look at it from a frontier market or emerging market like Nigeria or African economies, right? It doesn't play out as much, right, in advanced economy. So basically, the transmission mechanism or how quickly growth is going to slow, right? It's not that. When you compare that with emerging markets, it's not that there's a very big difference, right, on how quickly it impacts growth.
So let's look at another issue now: fuel. At this point, when oil prices go up, we even got reactions, here from oil marketers. They did say, you're going to have to pay more, for fuel in Nigeria. And now we see this dramatic drop in oil prices. What next?
I mean, we know that prices are very sticky. Right?
Yeah, always sticky
downwards. Sticky downwards, actually, laddie.
Sticky downwards.
Sticky downwards, yes. So what that means is that they're quick to rise, but slow to fall.
Because I'd like to see the same energy, bringing out those fuel prices. We were seeing with oil this morning.
I mean, we all want that. I mean, we all want that. But the truth of the matter is that It will take some time, especially because we haven't yet heard from Dangote yet on their own changes in price, right? We are now working in a different price regime, right, or market structure specifically, right, for Nigeria's downstream petroleum market. And what that means is that, and I think I also explained the last time I was here, that if you want to know how quickly oil prices, how much petrol prices are going to increase, or the movement in petrol prices, just watch the oil market. Right. And we have seen a very sharp increase in oil price, in all global oil prices, and that's why we're seeing the sharp increase in, petrol prices. It was quite instant, right? But then again, when you consider the 24-hour move, right, or 6-hour move in the global oil market, that didn't necessarily happen in Nigeria immediately.
Right.
So what that tells us that there is still that lag. But the problem now is when you consider all the other factors, right, the oil refining cost, the cost of bringing the crude oil, the cost of salaries, all of the other costs that go into refining the raw material itself and taking it from the refineries to the market, the logistics cost involved. When you consider all of that, it's not so easy to cut prices, right? But then again, right now we're working in a market where there's a price leader now and a price follower, and the market will generally go in the direction of the price leader, right? And right now, that price leader seems to be Dangote, and until we see a strategic move from Dangote, I guess we most likely will have to play in this level of uncertainty and higher petrol prices for now.
Because this kind of reminds me of importers that sell goods. Like they'll tell you, oh, maybe the Naira weekend, and that's why the prices are high, right now. And, some of them might have bought the goods when, it was a favorable exchange rate. But immediately there's a devaluation, they raise prices, even though the stock they have was bought at a favorable MI. Is that what's playing out in the oil market here? I
mean, I could say it's a mix of both, right? Because oil, I mean, you don't just get
maybe some profiteering going on.
Well, I wouldn't exactly call it that, but I would say that there is some element of it. There will definitely be some element of it happening, because we have seen periods in Nigeria where there was artificial scarcity just so prices could come up, right? And that's because of the market structure that we were running at the time, where it was very rigid. There was just one supplier. Marketers couldn't make a profit because their cost was not reflected in their price. But now we are working in a world where cost does reflect pricing, right? And marketers do have that flexibility to make sure that their prices do reflect their cost. We're now working in a deregulated market. But then again, I guess this is where some regulation also has to come in to ensure that that's not the case, right? And like you had mentioned, it's not even only in the petrol market. This cuts across even food markets. It cuts across the smartphone market, everywhere, right? And it's a conversation that has to be happening around general price regulation in Nigeria to ensure that it works for the benefit of the consumer, because they are the ones that will eventually feel the brunt of it. We have heard conversations around, speaking to ensuring that marketers don't, engage in price gouging, increasing price discrimination, so much so that it significantly impacts the consumer, but while still ensuring that they're able to make a profit, right? Those conversations need to happen. The regulation also needs to happen, and that regulatory oversight needs to be much more instated.
Not in a way that it stifles. Gone through a lot.
Exactly. And I know you're their advocate this morning.
Yes. I'm looking out for the consumer.
Yes.
At this point, but we know definitely businesses must also make some kind of profit.
Of course.
But not at the expense of the consumer.
Definitely.
At this point. So I need to see those fuel prices come down. With this dramatic drop we're seeing.
I mean, remember, Ladi, it will take some time.
Yeah.
Right? It will take some time.
Hope the lag doesn't take too long.
Well, hopefully it doesn't take too long, especially in the world where we don't see oil prices sharply increase again.
Right.
So if
are we out of the woods yet, though?
No.
With the oil prices?
No, I don't think so. The volatility we do expect to still continue, not until there is some stability with what is happening with the the US, Iran.
There's so many wars at this point.
So many wars at this point. And all of those sentiments are beginning to feed into prices. But I guess the global market right now is pricing this Israel, Iran, and the US dynamics a lot more than the Russia, Ukraine, and this is the focus right now. So I understand where the sentiments are coming, and I guess it's extremely important for us to even see how quickly this escalated and how quickly the markets respond, to tell you how much of a correlation it has on the market. So once anything is going on very quickly between Israel, Iran, Gaza, and all of that, because we didn't see this much of a sharp increase with the Israel-Gaza, to be very honest.
Right.
The market did react, but not this very quickly. Yeah. What this is mirroring is the Russia-Ukraine, if anything. And what that tells us is that the market deeply understands the players involved, because Iran is a very strategic partner or strategic member of OPEC, the second largest, producer.
I remember Russia-Ukraine took oil to high about $130.
Yes. Yes, so we're definitely playing within
around that range.
Yes.
Thank you so much, Dumebide, for breaking it down for us. And we're tracking everything, because news could come out now that could drive sentiment the other way. Thank you so much for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, we find out what's playing out in the global economy. That's in a moment. Just stay with us.